Hello everyone, welcome to JAIIB CIB English Medium. This side Aarti, and today we are going to complete our mini marathon of your AFFs, especially Module C and D. So before we start, please tell me about the audio and video quality so that we can start our today's session. Please tell me. All good? Please confirm me about the audio and video quality. Are we good to go? Then we are going to start today's session. So I think we can start now, है ना? चलिए, so if you are a first time visitor or if you don't know about this channel, so let me tell you some brief description that, okay, so this channel particularly provides you with all the planning strategies for your JIB, CIB and after that bank promotional exams. So do subscribe to this channel, and this channel specifically gives you each and everything required for your exams in English. So do subscribe to this channel, and today we are going to talk about the mini marathon related to module C and D. Chaliye, so without wasting any time, let's start today's session. So as you know that this upcoming week is very crucial for us. So you can use this virtual library for downloading your mini marathon sessions, for watching your special sessions. You can download this virtual library, you can use this virtual library, and you can access all this sessions along with the PDFs. Okay, this is the virtual library, and after that this is your whole week timetable. This side is your bilingual and this side is your English medium AFM timetable. So do take this screenshot because this is very helpful timetable. In this we have already mentioned in what classes we are going to conduct. Chaliye. So with this, let's start with today's first question. So first is, operating margin can be numerically expressed in form of following equations. First, net profits minus operating expenses divided by revenue. Second, gross profits minus operating expenses divided by revenue. Third, net profits minus operating revenue divided by revenue. And fourth, gross profits minus non-operating expenses divided by revenue. In this, you need to identify that which formula specifically talks about the operating margin. Please tell me the answer for this. First option, second, third or fourth? What do you think? Which option is correct? So when we talk about the ratios, in that we talk about so many different types of ratios. Okay. So the first ratio we talk about the profitability ratio. Profitability ratio. Under that profitability ratio, we calculate so many different type of ratios: gross profit, net profit, overall profit ratios. Correct. So in that, one of the methods, one of the ratios helps us to calculate this operating margin. Operating margin says that how much amount we have after deducting your direct expenses, your indirect expenses. Finally, what is the profit? We can call that as net profit. Finally, this net profit with how much sale we have, that is sales amount. So this formula we use. And how to calculate this operating net profit, or we can say operating margin, with the help of, can anyone tell me how to calculate net profit? How we calculate net profit? Net profit minus operating expense, or gross profit minus operating expense. Third, net profit minus operating revenue. Fourth, gross profit minus non-operating expenses. How do we calculate this net profit? Can anyone tell me? For calculation of net profit, we use gross profit minus your operating expenses. After deducting your all the direct expenses, we get what? Gross profit. Okay. And finally, after gross profit, we deduct the other expenses, other nominal expenses like rent. Okay. Like what type of expenses? Like rent, audit fees, electricity, all this amount we deduct, salary. So with this we calculate the net profit. Okay, so net profit divided by sale will give you the operating margin. So the correct answer of this question is your second. This is your correct answer. Chali, let's see the next question. If you invest 10,000 at an annual interest rate of 8% for 5 years, what will be the future value of the investment at the end of the period? You need to calculate the end value, that is future value. Okay, what we need to calculate? Future value of our investment. And how much we are investing at today's time period? That is 10,000. At what rate? At 8%. For how many years? For 5 years. Chali, please try to calculate this. In this you need to calculate the future value. Today we are starting with some average kind of questions, okay, because this is from your model C. So if you are a first time viewer, so these questions will be easy for you to practice, okay? And slowly and gradually we will be increasing the level of questions also. Please tell me how to calculate future value. So for the calculation of future value, what we do? We use this formula known as future value equal to your principal amount, we can say in this, plus into means in bracket 1 plus r to the power n. Okay. R is how much? R is your interest rate. So in bracket we are going to write as this. How to convert 8% into fraction? You can use 8 divided by 100, okay, or 0.08. This is a fractional form of this 8%. Okay. And what is your n? How many years? N is your number of years. That is your 5. That is your 5. And what is your amount of investment? That is your 10,000. That is your 10,000. Correct? So you need to multiply this 10,000 with this value. Chali. So how to calculate this? Do you know how to solve this power value? If no, then please watch me that how I'm solving this. Okay, you need to use your calculator. So in bracket, what is given? 1.08. Please type 1.08 in your calculator. And as you can see, the power is 5. So if you are calculating in power 5 and that too in a future value calculations, so you need to press multiplication for 1 time and then equal to for 4 times. Multiplication 1 time. Okay? And equal to n minus 1. N is what? Your 5. Means 4 times you need to press equal to. That is 1, 2, 3. So this is your value. Then you need to multiply with 10,000. What is your value? What is your future value? Tell me. What is your future value of this particular investment? Because you are going to get 8% every year. So as soon as you calculate this, your answer will be 14,693. Okay? This is how we need to calculate the future value. This is not the discounting one. This is the calculation of future values. Chali, let's see the next question. What is the future value of 15,000 invested for 3 years at an annual compound interest rate of 10%? Now, please try this one. This is exactly the same question like previous one. Please try to solve this. Please try to solve this. Please try to solve this one. Again, we need to use that same formula. Okay? We need to use that same formula. What is the formula? Future value equal to your investment amount 1 plus r to the power n. So what is your investment amount? Again, they want to know the future value. So what is your investment amount? That is 15,000. 1 plus r is how much? That is 10%. What is for how many years you are going to invest this amount? For 3 years. Chali, tell me the answer. Tell me the nearest answer of this. Again, you need to use the calculator. Firstly, type this amount which is within a bracket, that is 1.1. For multiplication, for the power, you need to use the multiplication, that is multiplication. And how many times we need to press equal to? Can anyone tell me? How many times we need to press the equal to? Can anyone tell me in this? For how many times we need to press the equal to button? As I told you, n minus 1, that is 3 minus 2. So we need to 3 minus 1, so we need to press 2 times equal to button. Okay, that is 1, 2. Whatever amount you get, you need to multiply with 15,000. 15,000, this is your amount. Okay, that is 19,965. 19,965. So as in this, you can see there is no such direct answer, but you can do the round off. Okay, you can do the round off nearest to your 100. So your correct answer will be 20,000. Correct answer is your 20,000. So we are going with B. Chali. So I hope you understood that how to calculate the future values. We need to use this formula for calculating the future values. Okay. Chaliye, let's see the next question. Accounting ratios provide a dash measure of a company's performance and conditions. Option A, definitive. Second, gross. Third, relative. Fourth, qualitative. They are asking that accounting ratios. Under module C, we calculate the ratios. So that measures companies' performance and conditions. So that is what type of measurement? It provides what kind of relation? Definitive, gross, relative, or qualitative? Tell me, out of the 4 options, which option is your correct option? Tell me, which is your correct option out of the following? See, in ratios, what we talk about? In this ratios, we use the financial statement specially. Okay. While calculating the ratios, we use financial statements. In this, mainly we use the balance sheet and P&L items. And with this, we make the relation. We make the relation that how they all are related by different ratio calculations. Okay, by solvency ratios, by profitability ratios, long-term ratios, debt equity ratios. So we use this financial statement for the accounting ratio calculation. So that sets the relative measure. That sets the relative measure of your company's performance and conditions. Okay, so the correct answer is your relative. Yes, correct answer is your third option. Chaliye. Let's see the next one. A company has the following capital structure: 5 lakh in debt with a cost of debt of 5%, 3 lakh in equity with a cost of 10% and a tax rate of 30%. What is the WACC? In this, we need to calculate the weighted average cost of capital. What we need to calculate? Weighted average cost of capital. Okay. Under this cost of capital, always remember one thing, that under capital, we include both the things, whether it is your equity and debt. Equity is what? In which we show the ownership. Okay, equity is our ownership, debt is our loan part. So for calculation of cost of capital, how much we are able to generate the funds, for that we include both this equity plus debt. But we cannot directly add this. For that we need to do the weighted average. What we need to do? Weighted average. And the formula for calculating this WACC is whatever cost of debt we have, that we need to multiply with the proportion of debt in our company. Okay? This needs to be multiplied with the cost of debt plus cost of equity that we have needs to be multiplied with the proportion of equity. But remember, in this question, they are giving one extra data, that is tax rate 30%. So how to calculate this? How to calculate with the help of tax rate, do you know? So in this, are we going to add the tax rate while calculating, or we are going to ignore it? What do you think? Are we going to ignore this tax rate while calculating the WACC, or we are going to adjust it? So what do you think? We are going to adjust this tax rate in our calculation, or we are going to ignore it? Tell me. What do you think? Like in exams, these type of questions will be coming. So try to answer me. What do you think? Are you going to adjust this tax rate, or you are going to ignore this tax rate? What do you think? So in this, we are going to adjust this tax rate. Correct, Alina ma'am. We are going to adjust this tax rate. And the tax rate we are going to adjust in our debt side. Okay, that we are going to adjust in our debt side. Chali. So let's solve this together. How to solve these type of questions? In this, what is your cost of debt? Tell me, what is your cost of debt? Can you identify what is your cost of debt? That is your 5%. Hana? That is your 5%. We are going to adjust this tax rate in this 5%. So we are going to do 1 minus. Tax rate is what? We are going to subtract with 1 minus T. Okay. This is the formula we are going to use. So CD is cost of debt is how much? 5%. We need to multiply with 1 minus tax rate. That is your 30%. So 0.30. That needs to be multiplied with proportion of debt. What is the proportion of debt in your company? So as a company, your total capital is how much? Your total capital is equal to 5 lakh for debt side and 3 lakh for your equity side. Means company is having around 8 lakhs total capital. Total capital is around 8 lakhs. So how to calculate the proportion? How to calculate the proportion? What is the proportion of debt in this overall capital? For calculation of proportion, we need to do 5 lakh divided by total capital. That is 5 lakh divided by 8 lakh. Okay? So proportion of debt is how much? 5 lakh divided by 8 lakh. This is your debt side of calculation. Now, next, you need to add with the equity calculation. So, how we are going to add this equity calculation? Chaliye. So for the cost of equity, how much your cost of equity? That is 10%. So we are going to use this 10% directly and we are going to multiply with the proportion of equity. What is the proportion of equity? Proportion of equity is your, tell me, what is the proportion of equity? Tell me. If 5 lakh divided by 8 lakh is proportion of your debt, then what is the proportion of equity? Five lakh divided by 8 lakh is proportion of debt. So, proportion of equity in your overall capital will be what? That will be the remaining amount. That is 3 lakh divided by 8 lakh. Okay, because overall capital you have around 8 lakh. In that 8 lakh, 5 lakh belongs to your debt amount and 3 lakhs belong to your equity amount. That amount means as a company you borrowed around 5 lakh from the market. That is debt amount. But as the 3 lakh, that is what owner brought in that particular company. That is the amount. Correct. So, after solving this, what is the final answer? Can you tell me what is your final answer? After calculating this, please try to calculate this. In exams, they are asking this type of questions only. They can ask you that what is WACC. They can ask you the full form. Okay, they can ask this formula also, or they can give these type of questions also. Please try to solve this and tell me the answer. What is the interest rate after tax deduction? So for that, you need to solve this part. Okay, so the amount will be 5 into 0.7. 1 minus 0.3 is what? 0.7. So if you do 5 into 0.7, what is the answer? Whatever answer you get, you need to multiply with 5 lakh divided by 8 lakh. So overall amount of this bracket will be 2.1875. Okay, this is the amount you are going to get in this after solving this bracket. Then for the next bracket, what we are going to do? 3 lakh divided by 8 lakh into 10%. So what is the amount we are getting in the next bracket? That is, this is in percentage. Okay. So the next bracket amount will be 3.75%. Chaliye, tell me, what is the final answer? What is the final answer? $3.75 plus 2.1875. Tell me which option is your correct option? Which option is your correct option? A, 8.5%, B, 9.5%, C, 7%, D, 6%. Which option is your correct option? Just you need to add 2.1875 plus 3.75. So your final answer will be 5.93. Okay, so if you round off this, 2.1875 plus 3.75. So your final answer is 5.93%. So if you do the round off, your nearest answer will be 6%. Your correct answer will be D. Alina ma'am, please check your calculation once. Now, let's move to next question. In this, we need to do the match the following. Okay, we need to do the match the following. In your first column, domestic lease, international lease, cancelable lease, non-cancelable lease, wet lease, dry lease. These are your column 1. Under your column B, A option says lease where lessor operates equipment. B, lease cancelable upon specific contingencies. C, all parties are domiciled in India. D. Lessee will with country risk and currency risk. Then lease where lessee is responsible for operations, and F. Lease that cannot be cancelled easily. Please calculate the do the match the following. This question is from your equipment lease topic. Okay, under that we study about different types of leases. So in this you need to do the match the following. You need to do the match the following. Okay. So as I can see, domestic lease means all parties are domiciled in India. That is correct. That is totally correct. Then, what about next? First, C. What about international lease? International means you are doing the transactions with foreign countries. Okay, so under that lease, we are going to see the current country risk and currency risk. So that is again true. So for the second, we have D option. International lease equal to D. So that is your second D. Cancelable lease. Correct. Second D. International lease means when you are doing the transactions or you are taking any equipments on lease from outside India. That is your international lease. Domestic lease means whenever you are taking any equipments on lease within the boundary of India, in your domestic country only. That is your domestic lease. Tell me, what about the third one, cancelable lease? Cancelable lease. Yes, for the third one, cancelable lease, your correct answer will be option B, which talks about lease cancelable upon specific contingencies. Okay, we have few specific points. Upon that only you can cancel it. So the correct answer for third is your option B. Okay, for the fourth, non-cancelable lease. Tell me, for the fourth, non-cancelable lease. As the name says, non-cancelable means you cannot easily. Okay? There are few restrictions, there are few terms and conditions that you need to comply if you want to cancel it. So for your non-cancelable lease, your correct answer will be 4F. 4F. Now tell me, wet lease and dry lease. So under wet lease, what we talk about, that under this lease, your lessor operates equipment. All your insurance payments, all the risk and reward is actually taken care by your lessor. That is your wet lease. Correct? That is your wet lease. So fifth answer is your A. Fifth answer is your A. And dry lease means in this, you are going to give the operations, risk and reward to your lessee. So the correct answer of this sixth is your E. Sixth is your E. Okay, so this is the correct match the following answer. Chali. Please tell me which option is correct. Tell me which option is correct. A, B, C or D. So as per this correct statement, our first option is correct. Okay? Your correct option is your A option. Chali. So this is all about the lease. Lease means you can understand with a simple term when you are renting something. Okay? When one person is lending their equipments to the other party. So there are different ways through which you can take something on rent. So these are the few types of lease we have. Chaliye. Now we are moving to next question. Next question says, which of the following is not a financial derivative? Option A, stock. B, futures. C, options. D, forward contracts. Not a financial derivative. Not a financial derivative. Stock, futures, options, or forward contracts. Tell me. A, B, C, D. Which is not a derivative. Derivative means we have some underlying asset. Underlying asset for which we are having some risk. So for protecting this risk, we enter in some transaction. Okay? For future, transaction for future. To protect that particular risk, we are entering into a transaction. So as per this, your stock is not a type of a derivative. So the correct answer of this particular question is your answer A. Okay? So not a financial derivative, stock. Futures, options, forwards, all these are different types of your financial derivative. Can you tell me how many users we have? How many type of users we have under this derivative? How many types of users we have under this? How many type of users we have under derivative? Users of your derivative? Tell me, how many types of users we have under derivative? We have three users. Okay? We have mainly three users. First, hedgers. First one, hedgers. Then next, we have traders. Okay? And the last, can anyone tell me last one? We have speculators. Okay? We have three types of users. Then you know how many derivative markets we have? How many derivative markets we have? Tell me. We have three type of users: hedgers, traders, speculators. Okay. Next I am asking, how many markets we have under derivative? How many markets we have under derivative? How many derivative markets we have? We have two markets. First, over the counter, and second, exchange trade. That is Bombay Stock Exchange. Okay. No, this market is there under derivative. Over the counter market, or it can be your exchange trade market. Okay? Like your BSC, Bombay Stock Exchange, National Stock Exchange, New York Stock Exchange. So that is your exchange trade market. Over the counter market means like we both are friends and we are entering into a transaction. There is no some intermediate parties present. So this is the first type of market, and second is your exchange trade market. Okay? Chaliye. Now, next, in a process industry, the output of process A is transferred to process B at a notional profit of 20% on cost. The cost incurred in process A is 2 lakh and the management wishes to know the transfer price of the output from process A to B. What is the transfer price? In this, you need to calculate what is the transfer price. Option A, 2,20,000, B, 2,40,000, C, 2,50,000, D, 2,60,000. Okay, before we solve this particular question, let me give you one information that your ratios module D formula sheet is there in your description box. Okay, if you want to download the formula sheet of your that ratios and module D formula sheet, like what type of numericals you have, what type of formulas we need to use, for that you can use our description part. Okay, in our description there is a link through which you can download this PDFs related to different formula sheets of your module D and ratios. Chaliye, try to solve this particular question. For last day revision, you can download this formula sheets, okay, so that you can revise in a one go ratios and module D. This is totally handwritten notes, so you can use it. Chaliye, let's back to get this question done. Now, what they are asking, transfer price. Okay, in this question, they are asking about the transfer price. So, this is a process industry in which you have two departments, okay, your A department and B department. In this, they are saying, as per the first line, that output of process A is transferred to process B department. Means whatever A department produces, this is used by your B department. Okay, so A output is actually the B's input. This is what they are saying. A's output is actually the B's input. Now in this, whenever, as per your costing, if any one department transfers their output to the next department and that department uses that particular output as their input, we need to calculate the notional profit. Okay, we need to calculate the notional profit, because then department A and B will be showing their financial data to their top level management. They will be showing their data separately. So they need to show that how much profit they are earning. But that is not a true profit that is calculated through your financial statements. This is your notional profit. When one department transfers their goods to the next department for further processing or for further output-input relation, then we say notional profit we need to add in this. So suppose in this, they are saying the notional profit of 20% on cost. How much? 20% on cost. Okay. And the cost incurred in process A. How much cost A department incurred? That is your 2 lakh. How much A department incurred? That is 2 lakh. Management wishes to know the transfer price of the output from A to B. Remember, whenever A is transferring any outputs to B, they are not going to show only 2 lakh. They are going to add the notional profit also. And the notional profit, how we are going to calculate? 20% on cost. So we need to use 2 lakh into 20%. After adding these two amounts, you are going to charge. Finally, what is the amount? That is 2 lakh 20% plus 2 lakh. So 2 lakh 40 is your final answer. So the management wishes to know the transfer price of the output from process A to B is your 2 lakh 40. This is your transfer price. This is your transfer price. Okay, under your costing methods, this is one of the unit from your module D. So in that costing methods, we need to read one subtopic known as interprocess costing. So this question is from this particular subtopic, interprocess costing. So in exam, they can ask you like this question also. So which is your correct option? Option B. Okay, which is your correct option? Option B. चलिए, let's see the next question. Under the standard costing system, if a company chooses to allocate cost variance to finished goods, work in progress, and cost of sales, what is the impact of this approach? A. Stock of work in progress, finished goods, cost of sales will be maintained at standard cost only. B. Variance will be proportionately distributed across the finished goods, WIP, cost of sales based on their respective closing values. Third, all variances will be charged directly to the costing profit and loss account. Fourth, positive variance will be carried forward as deferred credits to adjust future negative variance. This question is from module D, again one of the unit which is known as standard costing system. What we are going to do, see, under this standard costing system we have this subtopic known as how to allocate the accounting entry. Okay, how to do the accounting entry of your variances, how to pass different accounting entry, and we have the three options through which we can show our accounting treatments. Like number 1 says you can transfer the variance to your costing P&L account. First you can do this. Okay. Second treatment, you can show whatever variance you are getting. And how to calculate variance? We calculate this variance whenever you subtract the estimate with the actual, you get the difference, and in costing this difference is known as variance. Okay? Under the costing, this estimate is difference between this estimates and from estimate to actual, that is variance. Chali. So what second treatment you can do for this variance? You can transfer proportionately to the closing balance of finished goods, cost of sales, WIP. Okay, you can distribute the variances in the proportion of closing balance of this three. This is what you can do. The second accounting treatment. Now, third accounting treatment says, if you are getting positive variance, you can defer this positive variance to the future years, so that if you incur any negative variance in futures, you can set it off. Tickets. So we have these three types of variances accounting treatment. So the correct answer of this question is your option B, because in this they are saying that as a standard costing system, company chooses to allocate variance, finished goods, WIP and cost of sales. So how we can allocate this variance into this three? By taking the proportionate as per their closing balance. Okay, this is how we are going to distribute our variances. So the correct answer of this question is your option B. You are going to proportionately distribute finished goods, WIP, cost of sales based on their respective closing values. Correct. So the option is B. Chali. Let's see the next question. Read the following statements carefully and choose the correct option. Number 1. Statement 1 says marginal costing provides a better and more rational basis for deciding the sales prices of products and services, particularly in adverse business environments or recessions. Second statement, the break-even point, which is crucial for management, can only be determined through marginal costing. Third statement, the assumption that fixed costs remain constant and variable costs are fully proportional to production is unattainable. A. Only statement 1 is correct. Statement 2 is correct. C. Only statement 3 is correct. D. All these statements are correct. Out of these three statements, what do you think, which option is correct? Out of these three statements, you need to find out that which option is correct option. Okay. So as I can see, option C, you are saying is a correct option. Acha. What about others? Only third option is correct as per your reading. Okay, what about others? What do you think? Which option is correct? First statement, second statement, third statement? What about others? See, remember one thing, your AFM, especially for your AFM, okay, let me tell you one very clear thing. Okay, your 15 to 20 marks is only about numericals. Only 15 to 20 marks. But your remaining 85 to 80 marks is what? Is your theory. So if you're planning that you, with the help of just numericals you can clear it, that is not at all possible. You need to study this theory part also. So please try to participate and tell me which option is correct. Okay, as I can see, all the statements are correct. One of the option is there. Chaliye, so let's read one by one. So it's statement 1 says what? Marginal costing. We know now what is marginal costing. Whenever we are producing one extra units of goods. That is what marginal costing is all about. So under marginal costing, it is said that always use variable costing for calculation. Variable cost for calculation. So what about fixed cost? Fixed cost is used for profit calculation only. That is what given by marginal costing. So as per this, marginal costing provides a better and more rational basis deciding the sales price of products, services, particularly in adverse business environments or recession. So this is your true statement, because marginal costing talks about that under the recession time or under some business, when your business is not performing well, or we can say the adverse business condition, that time we try to recover our variable cost only. Okay, at that time we want to recover our variable cost only. So this is a correct statement. This is your true statement. Chaliye, let's see the second statement. The break-even point, which is crucial for management, can only be determined through marginal costing. Yes, when we read about marginal costing, in that break-even point, contribution, okay, cost volume analysis, PV ratio, all this we read under just your marginal costing. So again, your statement 2 is your correct statement. Statement 2 is your true statement. Okay, chaliye, let's see the third statement. The assumption that fixed cost remains constant and variable costs are fully proportional to production is unattainable. Means what? The assumption of fixed cost remains constant. Okay. Whenever we read the theory about costing, in that we always say fixed cost means constant cost. You cannot change it with volume of production. And variable cost is that amount that fluctuates with the volume of production. Correct? But in practically, if we talk about these things, that is totally unfair thing. That is not correct. Whatever we read fixed constant, variable means fluctuating, that is totally wrong in practical time. So your last third statement is again true statement, because this third statement talks about the limitation of your marginal costing. Statement 1 and 2 talks about the advantages of marginal costing, but your statement 3 talks about the limitations of marginal costing. So all these 3 statements are correct statement. So as per this, your correct answer is option D. Okay, your correct option is answer D. Chaliye. Let's see the next question. A company manufactures 2 products A and B. Okay, A, B. The selling price and variable cost per unit are as follows. ठीक है. First product A detail is given, that is selling price 200, variable cost 120. Then product B, selling price 150, variable cost 90. Then if the company has a fixed cost of 3 lakh and sells 1000 units of A, 1500 units of B, what is the overall profit? What we need to calculate in this? Overall profit. We need to calculate the overall profit. Chaliye. So in this, let's use the timer, and I request from each of you to please solve this. Take 1 minute and try to solve this. Try to solve this. Last 30 seconds. Last 20 seconds. Last 10 seconds. And your time is up. Tell me, which option is your correct option? A, 50,000 loss. B, 1,30,000 profit. C, 1 lakh profit. D, 1,30,000 profit. Tell me, which option is your correct option out of the 4 options? Okay, as I can see, option B, 1,30,000 profit. Okay, what about others? What about others? What do you think? Overall profit is how much? A, B, C, D? Chaliye, let's solve this. So A and B. Okay, we have 2 products, and A product we produce how many units? We produce 1000 units. Okay, for B we produce how many units? That is 1500 units. Okay, now we have selling price for A and B. What is the selling price? That this is in your per unit. Okay, 200 and 150. Then we have variable cost. That is 120 and that is 90. Acha, tell me, if we subtract selling price minus variable cost, what we get? What we get in this? Okay, 1,30,000 loss. Let's check this out. Well, which option is correct? B or D? Tell me, if we subtract selling price minus variable cost, what we get out of this? Tell me. I'm waiting for answers. Please tell me. What we get if we subtract selling price minus variable cost? Tell me. Yes, contribution. Okay, we get the contribution. Now, 200 minus 120, this will be 80, and 150 minus 90, this will give you 60. So this contribution is per unit. Now, next we need to do multiplication with total units. We need to do with total units. So for A, 1000 units, for B, 1500 units. So what is your total contribution? What is your total contribution? For A, your total contribution will be 80 into 1000. That is 80,000. 60 into 150. That is 9,000. 9,000 for B. 60 into 1500. Sorry, that is 90,000. Chali. So here we understood that how to calculate contribution. Okay, next thing what we need to do, listen to me very carefully. Next thing, we need to calculate overall profit. Okay, and we have fixed cost, that is 3 lakh. So we are going to subtract total contribution amount with fixed cost. So what is your total contribution? In this we are going to add A and B both the total contribution. That is 80 plus 90,000. That will give you 1,70,000. This is your contribution. And total fixed cost is what? 3 lakh. Total fixed cost is how much? That is 3 lakh. So we are going to subtract directly from 3 lakh. Now tell me, profit or loss? And which option is your correct option? Which option? One lakh 70 minus 3 lakh. Your 1,30,000 is correct. But this is your loss or profit? This is your loss. Okay, this is your loss. Okay, because your contribution is your surplus amount. This is your surplus amount. Okay, your surplus amount is less than your cost. So this is your loss situation. This is your loss situation. Okay, so the correct option is your option D. If your contribution, if this total contribution is suppose 4 lakh, okay, suppose it is 4 lakh and your fixed cost is suppose same 3 lakh. Now tell me, this situation is what? 1 lakh is profit or loss? Tell me. This is profit or loss? Suppose your total contribution is 4 lakh and your fixed cost is 3 lakh. So after subtraction you are getting 1 lakh. So this 1 lakh is what? Profit or loss amount? Profit or loss amount? Yes, this is your profit. Okay. Now I hope you understood that how to identify whether it's a profit or loss. I hope you understood this. Okay. So that is your profit situation and this is your loss situation. Okay. And the correct answer of this question is your option D. Chaliye, let's see the next question. A company has a carrying amount of an asset 5 lakh and its tax base 4 lakh. What is the deferred tax if the applicable tax rate is 30% and name the deferred tax? Option A, 30,000 DTA, B, 40,000 DTA, C, 50,000 DTL, D, 30,000 DTL. This question is from your income tax. Again, this you need to calculate the deferred tax amount. And what type of deferred tax is this? A, B, C, D. Tell me. This question is from your income tax. Okay. Chali. So deferred tax means what? Deferred tax means we need to pay tax in future. But that is not true that you need to pay tax only. You may get the benefit also or you need to pay the tax also. Okay. So under this deferred tax, you can get the two conditions under your temporary difference. That is your deferred tax liability and deferred tax asset. What is deferred tax liability? Suppose, see, this deferred tax is applicable to companies. Okay. Whenever we talk about the company, so company needs to prepare their financial statements. One, they need to prepare the financial statements. Next, they need to follow the income tax rules. Okay, Income Tax Act they need to follow. So one, rules and guidelines is given by Income Tax Act. Second is given by Financial Statement Preparation under your Companies Act 2013. So there are two different acts which are applicable on this particular single company. So sometimes both the acts fluctuate with each other, because of which we get some differences. So that differences will be generating your temporary difference. If that difference generates your temporary difference, that temporary difference will lead to deferred tax liability and deferred tax asset. Deferred tax liability means if in your current year, okay, you are paying under this income tax and under your Companies Act, okay, under your Companies Act. One is your income tax and one is your Companies Act. So if under this income tax you are paying less tax, okay, you are paying less tax compared to your this tax amount. So this situation will lead to deferred tax liability, because overall tax amount is greater under your Companies Act, but because of few deductions, because of few benefits, you are paying less tax at today's time period. Because of this, in future, you are going to see deferred tax liability means you are going to pay more tax in future. That is your liability. Deferred tax, future tax liability we are going to see, because today we are enjoying the benefit. Okay. On the other hand, if you are paying more tax, compared to company's account calculation, then this is your deferred asset, because whatever amount you calculated, in that you are paying more tax at today's time. So you are going to get the benefit in future. Either you enjoy benefit at present time and face the liability in future, or pay more tax today and enjoy the, you can say the less amount payment of tax in future. So there will be always a reverse situation. If you are enjoying right now, you need to pay in future. If you are paying more right now, you are going to enjoy in future. That is what deferred tax asset and deferred tax liability. Okay, chali, let's solve this question now. In this, you have the carrying amount of an asset 5 lakh. Okay, so this is your as per Companies Act. What is the value? That is 5 lakh. And tax base means, as you can see the name tax. So this is your income tax amount. This is your income tax amount. So as per income tax, what is your amount? That is 4 lakh. Okay, so what is the difference you are seeing in this? Of 1 lakh. 1 lakh difference you are seeing. Okay. So in this 1 lakh, how much tax you are going to pay? So the rate is also given, that is, yes, tax rate 30%. So what is the amount? This is 30,000. Now tell me, this 30,000 is what? Are you enjoying today, or you are paying more tax today? As per this income tax, as you can see, we are only getting 4 lakh. Okay. Because of this, we are going to pay more tax or less tax. We are going to pay more tax or less tax. This is the asset value. As you are charging more depreciation at today's time period, that's why you are getting the carrying amount less than what you are getting under the Companies Act. Means we are getting more deductions. We are getting more expensive side calculation part. Okay, so that's why we are going to pay less tax. We are going to pay less tax at today's time period. We are paying less tax because today's time period. Okay, we are getting extra benefit by deducting this 1 lakh amount. So your answer will be DTL. This is not asset. This is your liability. Okay, because today you are charging more depreciation than your company's act. Means you are going to enjoy, you want to enjoy today's benefit of paying less tax. If you are paying less, you need to pay more. Okay, so as per this, which is your correct option? Your correct option is your option 30,000 DTL. Okay, this is your option D. That is your liability. Okay, this is your option D. Chaliye, let's see the next question. An individual gets an option to choose between the existing tax rates and the new concessional tax rates under which section? A. 115 BAA. Second section is your 115 BAB. C. 115 BBB. D. 115 BAC. Tell me, as an individual, we get the benefit under the new tax regime. So as per which section we get that benefit? In which we get the option whether we are going to choose the new one or we want to pay under the old tax regime. So what is that section? BAA, BAB, BBB or BAC? Tell me. This question is from your income tax and these type of questions will come now for 0.5 marks. Okay, these are direct type of questions. Remember, these are direct type question. So the correct answer is your option D, 115 BAC, under which as an individual we get the option. No, that is not BAB. That is not BAB. That is not BAB. The correct option is BAC. Okay, correct option is your BAC. Chali. Next, which of the following deductions is not available under Section 80C of the Income Tax Act in India? A. Investment in Public Provident Fund, that is PPF. B. Contribution to National Pension System. C. Payment of life insurance premium. D. Interest on home loan. Under income tax, we read so many deductions. One of the deduction is your 80C. So how much, which of the deductions we are not eligible? Out of the following investments, which is not available under 80C? PPF, NPS, insurance premium or interest on home loan? Yes, the correct answer is your option D. Okay, interest on home loan will never be the part of your Section 80C. If you are paying the principal amount of this home loan, then you are going to get the deduction under Section 80C. Okay, then you are going to get the deduction under 80C. Apart from this 80 deduction of principal amount of this home loan, whatever you are investing in PPF, NPS, LIC, you are going to get the deduction. Can you tell me what is the maximum limit? What is the maximum limit under 80C? What is the maximum limit? No, under 80C you can claim LIC, ma'am. Whatever amount you are paying for LIC, you are going to get the benefit of the deduction under 80C. Can you tell me what is the maximum limit? What is the maximum limit? What is the maximum limit under 80C? That is your 1,50,000. See, based on the deductions, they can ask you this type of questions also. Okay? So be prepared with maximum limit, section numbers, And what are the different examples we have? Please revise all these things. Chaliye. So the correct answer of this particular question is your option D. Next question. Mr. Verma has the total deductions during the financial year 1,50,000 in PPF, 25,000 for health insurance, 15,000 as interest on saving accounts, and 1 lakh from royalties. What is the total deduction he can claim? A 1,75,000, B 2,90,000, C 2,40,000, D 2,85,000. Tell me, what is the maximum benefit Mr. Verma can claim in his ITR? Tell me, what is the maximum benefit Mr. Verma can claim? Chaliye. So let's solve this together. Let me make 2 columns. Okay. Here I'm going to tell you the deduction section, their maximum limit. Maximum limit in this I'm going to tell you, and allowed limit for Mr. Verma. Okay, chaliye. One by one we are going to solve this. First deduction is PPF. Okay. So for PPF we get the deduction under section 80C. 80C. C deduction tells that you can get the maximum deduction of 1,50,000. So as Mr. Verma is also investing for 1,50,000, you are going to get the deduction of 1,50,000. That is allowed. Next, health insurance. Can you tell me which section covers health insurance deduction? Can you tell me which section covers the health insurance deduction? And what is the limit? What is the deduction section of this health insurance under your income tax? Yes, 80D. Okay, you can remember section 80D. D means doctor. Okay, health insurance, doctor. You can relate this. Health insurance, doctor. Now, what is the maximum benefit if you are less than 60 years or equal to 60 years? The benefit amount is 25,000. So, Mr. Verma is investing 25,000 full. So, we are going to take the deduction of 25,000. Okay. Next, suppose Mr. Verma is around 46 years. Chaliye. Next, 15,000 as interest on saving account. Now tell me, do we get any deduction under interest on saving account? Do we get any interest under saving account? Tell me fast. Interest. If yes, then do tell me the section number. What is the limit? Okay? Yes, we get. We get deduction and for this interest on saving account if your age is less than 60 years. So that section is your section 80 TTA. Okay, that section is your 80 TTA. Section 80 TTA, where you get the deduction of maximum 10,000. Okay, you get the maximum deduction of 10,000. Now, my next question is, are we going to receive 50,000 or 10,000 deduction for Verma ji? For Verma ji, how much deduction we are going to write? 15,000 or 10,000? How much you are going to allow as per Income Tax Act? 15,000, 10,000. But remember your maximum limit under section 80 TTA, that is your 10,000. So if maximum limit is 10,000, So what is the deduction amount we are going to charge? What benefit we are going to get under this deduction? That is 10,000. Okay, we are going to get the maximum deduction of 10,000. We cannot claim more than 10,000. Yes. Now, next. 1 lakh from royalties. Okay. Royalties, suppose this royalties belongs to your books. Tell me, which section we use for royalties if you are an author of some books apart from NCERT books? That section is your section. Tell me. QQB. B means books. Okay, B means books. And the deduction amount of that royalties income is actual amount or 3 lakh, whichever is lower. Actual amount is how much? Actual amount is your 1 lakh or 3 lakh, whichever is lower. So as per this, which is your lowest amount? That is your 1 lakh. Okay, that is your 1 lakh. So this is the overall deduction amount. So 1,50,000 plus 25,000 plus 10,000 plus 1 lakh. That is your 2,85,000. Your correct answer is 2,25,000. Maximum deduction Mr. Verma can claim and he is eligible for deduction is 2,85,000. Okay. So this is how we need to calculate. Yes, correct. चलिए. Let's see the next question. A manufacturer in a Manipur state has a turnover of 9 lakh in the previous financial year. If they anticipate a turnover of 12 lakhs in the current financial year, what is their GST registration requirement? A. Mandatory registration is required immediately. B. No registration is needed until turnover exceeds 10 lakh. C. Registration is required only if the actual turnover exceeds 10 lakh. D. They must register as soon as they anticipate crossing 10 lakhs. This question is from your module D, topic GST. Which is the correct option? Chali. Let's do the analysis of this question. So this question is from your GST. Okay. In this, what is the requirement? We need to tell whether this manufacturer of Manipur shall take GST registration or not. What is the requirement of GST for this manufacturer of Manipur? Let's read this together. So in the first line, they are saying you are a manufacturer or someone is a manufacturer in a Manipur state. So can you tell me what is the GST limit? What is the GST limit for Manipur state? Under GST, what is the limit? GST limit? If you are a manufacturer from Manipur state, what is the limit? Do you know we have so many limits? 10 lakh, 20 lakh, 40 lakh. So what is the limit? If you are a manufacturer from Manipur state, what is the limit? 10 lakh, 20 lakh, 40 lakh. What do you think? So for the Manipur state manufacturers, or if you are seller of this particular state, then your limit will be 10 lakh. Okay, your limit will be 10 lakhs. Then next, they are saying the turnover of 9 lakh in the previous financial year. So whenever we talk about GST registration, we never look for any previous year turnover thing. Okay, so this is for irrelevant data they are providing you. Next line, if they anticipate a turnover of 12 lakh in the current financial year, what is their GST registration requirement? Okay, what is their GST registration requirement? Tell me. So if they anticipate a turnover of 12 lakhs in the current financial year, anticipate means they are estimating that in this current year we are going to do the turnover, or they can do the business of around 12 lakhs. So this is what estimate, this is what budget they are preparing. So whenever we talk about GST, we never take GST registrations based on your budget or estimates. So again, this statement is irrelevant related to your GST registrations. As per this, as per your estimations, as per your budget preparation, you cannot tell that whether to take the GST registration or not. In actual scenario, as soon as you crosses the limit of 10 lakhs, you are going to take the registration immediately. Chaliye. So what they want, what is the GST registration requirement for this particular manufacturer? What is the requirement? See, option A says mandatory registration is required immediately. The answer is totally wrong, because we don't know that what is your actual turnover. As per your actual turnover, as per your aggregate turnover, we take the GST registrations. So as per this, there is no such data related to your actual turnover, actual aggregate turnover. So option A is your wrong answer. Chaliye, let's see the D answer. Okay, they must register as soon as they anticipate crossing 10 lakhs. Okay, that is true. But they are asking what is their GST registration requirement. This is correct. But we need to find out the most appropriate answer. They will get the registration as soon as they crosses 10 lakhs. But in this, what they are saying, must register as soon as they anticipate crossing. Anticipate means again they are thinking out of a budget point of view. Under GST registrations, we always look for actual aggregate turnover. In our books, are we crossing? Not in our budget preparation. Okay, so this option is your wrong, because we are anticipating that we are going to cross this. Under GST, we never anticipate anything. Chaliye, so your option D is also wrong. Now, next. Registration is required only if the actual turnover exceeds 10 lakhs. So, as per the real situation, you are going to take registration if it crosses 10 lakhs. That is true. But what is the current eligibility of GST registration for this particular manufacturer? Again, this is okay answer. But this is not a relevant answer that required by this particular manufacturer. Okay? Now let's evaluate the B1. What is the GST registration requirement for this manufacturer? No registration. No registration is needed. What this manufacturer will do? No registration is needed until turnover exceeds 10 lakh. This is the correct answer. For this manufacturer, right now, there is no GST registration requirement, because we don't know what is the actual turnover aggregate. As per your past data, as per your future estimates, you cannot say whether to take it immediately or not. So currently, there is no registration needed. So the correct answer is this one, B. Until turnover exceeds 10 lakh. That is true. As soon as that manufacturer will cross 10 lakhs, you are going to take the registration. Though your C and D is correct, but the most appropriate answer of this particular question is your B. See, we need to find out the most appropriate. Okay. They are the supporting one. But for this particular manufacturer, what is the current GST eligibility? That is what we need to tell in this. Chaliye. Next, statement 1. An account-linked financial service, the place of supply is determined by the location of the service recipient as per the supplier's records. Statement 2. Identifying the state location of service recipient in India is straightforward due to the digitalized and centralized scenarios. 3. Non-account linked financial services determine the place of supply on the location of the service provider. Fourth statement, extraneable claims are not considered as service under the service tax regime but are included in the definition of goods under GST. Statement 5, GST on banking transaction fees has increased to a tax bracket of 18%, resulting in higher charges for individuals on banking transactions. Options, statement 1 is correct, statement 2, 3, 4, 5 incorrect. Second option, first, third correct, 2, 4, 5 incorrect. Third option, 1, 3, 4, 5 correct, statement 2 is incorrect. D, all statements are correct. Tell me, what do you think? What do you think of this? Out of the following statements, which option is correct option? Option A, option B, C or D? Okay. Means you are saying that C option is correct. है ना? What about others? What about others? What about others? Okay, so the next answer you are saying that D is correct. Chali, let's evaluate these options. So statement 1 talks about account linked financial service. Okay, this question is from your GST module D. So first is your account linked financial service. So if you talk about the banks, whenever any customer approaches for account opening or for any services, they get one KYC form, okay, in which they get so many different options for address, permanent address, residential address, communication address. So as per that, this first statement talks about that account linked financial service, the place of supply is determined by location of the service recipient, because in that form, recipient is providing their location. So you can find it out easily, the location of supply. So the first statement is correct. Okay, let's see the next one. Identifying the state location of service recipients in India due to digitalized and centralized scenario is straightforward. But because of this digitalization, centralization, though we are getting the service recipients, but that is not very easy. That is not straightforward. That is very difficult. So statement 2 is your wrong answer, or we can say this is a false option, incorrect option. Okay? That is not straightforward. That is quite tough. That is difficult. Chaliye. Third statement, non-account linked financial service determines the place of supply based on the location of the service provider. Correct. This is also the correct statement. Fourth, actionable claims not considered as service under service tax. This is true. Okay, when means before GST, there were different type of taxes like service, SANVIT, VAT, Oct. So under that, actionable claims were not considered as service. This is correct statement. But after introduction of GST, we include this actionable claims under the definition of supply. So, but are included in the definition of goods under GST. So this is again a true statement. Chaliye, let's evaluate the fifth one. GST on banking transaction fees has increased to a tax bracket of 18%, resulting in higher charges for individuals on banking transactions. Again, this is true. So the correct option is your option C. Only second one is your false. That is not straightforward. Okay, that is very difficult. Chaliye. Let's see the next question. This is the explanation again. Let's calculate that in a factory processing crude oil into a refined oil. Okay. Crude oil is your raw material, refined oil is your output, finished product. The total production of refined oil during a month was 800 tons. Okay. Means after processing, what is your final outcome? 800 tons. The crude oil used in the production was 850. This is your input, this is your raw material. So you use 850 tons and you produce 800 tons. So the loss you can see 50 tons considered of a normal process loss 30 tons and abnormal loss of 20 tons. Now they are saying that this 50 ton is considering two things. One, 30 tons of normal loss and next 20 tons of abnormal loss. If the total cost during the month, including the cost of crude oil used, was 8 crore. In this, they are saying that the total cost is 8 crore. What is the value of the abnormal loss, assuming that no scrap is generated? Sorry, for calculation of value of abnormal loss, we need to use one formula, value of abnormal loss. And what is that formula? See, total cost minus, if you get any sale value of scrap unit, you need to subtract it, divided by input units. This needs to be subtracted by normal loss unit. Okay, and this you need to multiply with units of abnormal loss. With this formula, we need to solve the value of abnormal loss. Chali, one by one, we are going to put this information in this formula. Total cost is how much? That is your 8 crore. Okay, this is your 8 crore. In the last line, they are saying, assuming that no scrap is generated, means your value will be 0. Now, divided by input units, crude oil. How much is your input units? That is 850 units. What is your normal loss? In this third line, they are saying loss of 50 tons. Total loss is 50 tons. Out of this 50 tons, normal loss is your 30 tons. So we are going to subtract with 30 tons. Then you need to multiply with units of abnormal loss. So what is the units of abnormal loss? That is 20 tons. Okay, you need to subtract with, multiply with 20 tons. Chaliye, solve this and tell me the answer. 8 crore divided by 8,20,000 into 20 ton. Option A 1.8 crores, B 0.19 crores, C 1.6 crores, 0.16 crores, D 0.22 crores. Please tell me which option is your correct option. After solving, you are going to get the right answer as 0.19 crores. You are going to get the 19,51,219 around amount. Okay. So, as if you tell in crores, so the answer you are going to get, that is 19,51,219.5. Okay. So this is what you are going to get in lakhs. So if you write in crores, 0.19 crore is your right answer. Which is your right answer? Option B. Chali, Let's solve the last question. Under GST, which of the following statements about tax collected at source is correct? Option A, e-commerce operators are required to collect TCS at the rate of 1% on the net value of taxable supplies made through their platform. B, TCS under GST is applicable to all suppliers regardless of their business model. C, TCS collected by e-commerce operators must be deposited with the government on an annual basis. D, TCS under GST applies only to transactions involving interstate supplies. So as per GST, which TCS option is your correct option? A, B, C, D. Tell me which is your correct option. Under GST, if we talk about TCS, that TCS talks about whenever you are seeing any e-commerce. What are e-commerce operators? Like your Amazon, okay, Myntra, Nykaa, Zomato, Uber, Ola, all these are your e-commerce operator. Okay, so whenever they are present in any transaction, they need to deduct the TCS, means they need to collect the TCS. So as per this, the first option is your correct option. And the rate of the TCS amount is 1%. Okay, so correct answer of this particular question is your option A. Chaliye. So with this, we complete our mini marathon related to your C and D module. So if you want to get more confidence, like after completion of this particular session, you can evaluate yourself, okay, whether you are performing well or you need more concept clarity. So what you can do, you can enroll in our batches. Like you need to go for Adda 24/7. Then you need to select JAIIB, CIB, JAIIB October 24. You can use this last minute revision batches. If you want to clear and you are ready for few sacrifices for just few days, then you can use this last revision batch. And as you can see, we are providing you online live classes, test series, ebooks. Okay, just you need to click on buy now. As you can see right now, you are getting only 78% off. But if you use the coupon code, that is Y895, and you apply this, you are going to get the 80% off. Okay, the maximum discount of 80% off. And even if you want to increase this, so try to purchase the same batch from Adda 24/7 app, which is freely available in our Play Store. Try to purchase from there. If you purchase from there, you are going to get 1 extra % off over this. But remember, you need to use the coupon code, that is Y895. And please, if you want to clear this attempt and you are not ready with any concepts, then try to use this particular batch. Okay, that batch started today only. You can enroll in this. You can see the first demo class also. In that, Niharika ma'am started with your AFM revision, and I will be covering B and D. Niharika ma'am will be covering A and C, and I will be covering B and D. Chaliye. So with this, let's wind up this session. Thank you everyone for joining. Bye-bye. Take care. And if you face any doubt, or if you are getting any question related to your AFM, you can freely ask through our comments. And if you like this session, do press the like button. Thank you everyone, and don't forget to subscribe, because we are going to bring so many special sessions so that you can clear your this AFM exam. Thank you everyone. Bye-bye. Take care.